Hey everybody, I hope everyone is doing well and had a good day. In this video, we're going to review the E-mini S&P 500 5-minute chart for Monday, July 27th, 2026. Here is the daily chart, so the context on the higher time frame going into the day. The market has been in a trading range. We had this spike and channel bull swing over the past maybe 15 bars here to the top of the range. Then we had a bear breakout crossing below the moving average, and the market tested the moving average, sold off, gapped up, testing the moving average once again, sold off, gapped up and tried to break above the moving average again, sold off again. Now we have a couple of doji bars right in the middle of the range. And the expectation here is that there's probably sellers above these bars. Once again, sellers at the moving average, and they're trading range bars. So you expect traders to sell above or at the high of a trading range and buy at the low of a trading range. So expect sellers above yesterday's high and buyers below yesterday's low. Since it's Monday, I'm referring to yesterday, but I really mean Friday last week. 5-minute chart. Before I zoom all the way in, I think it's worth noting that today opened with this big gap up, but you can see even here on the 5-minute chart, the RTH chart, this is Thursday, Friday, and today. And there's this big bull channel line, so 3 big legs up. Bull, it's a rally here, leg 1, pullback, leg 2, pullback, leg 3. So the market is at resistance. We talked about the prior day's high on the daily chart, but also this channel line. So there's probably sellers, bulls taking profits, and bears selling to go short. So the expectation here is sellers at yesterday's high, Friday's high. Big gap up, and then a trading range bar on 1. Expect sellers above, and as far as buyers below, really not ideal just based on the higher time frame. You know it's a trading range, and there's probably sellers up here. So unless the bulls get consecutive breakout bars closing far above the bars to the left, we have to assume the market's going to fail to break out and reverse back down into the range. So consecutive doji bars on the open, still expecting sellers above. I would not buy below these bars because of mostly the higher time frame context. It's possible the gap up gets a second leg. There are trapped traders down here. You can expect support because it's a big third leg, and in a trading range environment, the pullback can be deep. Strong bear breakout 3, that's probably sell to close. Sell for any reason. If you're long, get out below bar 3. If you're flat, you can sell to go short. This is what we're expecting. Sellers at yesterday's high, and now you have a strong bear breakout closing on its low. Expect a second leg down, possibly a swing down. So a minor reversal, bar 4, trading range bar, probably not strong enough to reverse bar 3. Expect sellers above, a couple bars sideways, and then the bears get another breakout. It looks like there's a pullback here. 1 tick pullback, so technically tight bear channel. The market pulled back on bar 5. But on a higher time frame, this is a bear breakout. You can expect second leg down. 6 is still probably sell to close, sell for any reason. It's hard to make an argument for buying. The bulls, maybe they say it's a 50% pullback based on the gap up. The gap up, you can imagine, it's basically the same as a bull breakout. So it's possible that we bounce here, but the selling is too strong really to be buying. You have to expect a second leg down before there's any reversal and maybe resumption up for the bulls. In other words, you want to see a trend line break and then a test of the lows. We really don't have that yet. Another couple of doji bars, 7 and 8. Expect sellers above, probably sell to close. These are bad stop order buys. Low probability buy above 7 and 8. Another bear breakout 9. We're probably going at least a little bit lower. There's very little buying pressure on the way down here. So once again, until the bulls get a break of a significant bear trend line and then a test of the lows, we should expect lower prices. The bears are controlling both price, but also time. Doji bar 10, probably sellers above, probably going lower. Another bear breakout. It's possible that it's a third push. You can count 1, pause, 2, pause, 3, parabolic wedge. So it's a wedge on a lower time frame, but on the higher time frame, or on the 5-minute chart, it's a bear breakout. Very tight channel. Higher time frame, it's a couple of bear breakout bars. So yeah, it might pull back here on bar 11, but the expectation is a minor reversal and then resumption down. In this case, we sold off on bar 12, so instead of getting the bounce after 3 pushes, big bear breakout bar 12, approaching yesterday's low quickly, probably at least going to test it and see what's there. I said there's probably buyers below yesterday's low. It's a big trading range bar, or it's a trading range bar on the daily chart. And that rally, I said, trapped traders in this area. There's other areas back here I'll talk about a little bit later. The point is the market is quickly approaching support, so let's see how it behaves when it gets there. 14, bull reversal bar, but another doji bar. It's really a weak reversal bar. And the channel down, it's a bear breakout going down to 14. So do you really want to buy above 14? Probably not. It's another low probability stop order buy. If anything, traders might be selling above 14, expecting lower prices. But what the bulls have going for them is we're at support. So we might start to see some buying in this area soon. 15, big bear breakout bar going lower. But a couple of things here. I drew this big channel line. There's also a big bull trend line here. So maybe the bull trend line, something like this, 15, trying to break below it. Then also look back here, last week on Thursday, micro channel down to 76, big reversal. The traders who sold the close 76 never had an opportunity to exit their trade at break even, unless they scaled in. Maybe they scaled in and they had an opportunity to break even here. But if they sell the close bear on 76, sold here, the market never came back to that price, and it's approaching it here on 15. It's just another reason to expect support in this area. So you have the big bull trend line, yesterday's low, Thursday's low, and this bar 76 closed, all acting as support. 16, reversal bar. It's a strong enough bar that you can see traders are buying here. At least bears are taking profits. Not necessarily a strong stop order buy, but strong enough bar that bears might exit above bar 16, expecting a correction. We're bouncing at support, so rather than selling at support, bears can take profits and look to sell higher. And then the bulls actually get a decent micro channel to bar 18. Now the bulls have a trend line break. That's good for the bulls, but it's still probably a minor reversal. It's a strong minor reversal, but it's the only buying pressure that we've really had so far today. Market's testing the moving average, maybe getting close to this breakout point here. So the upside is probably limited. What about buying the close 18? If you're buying 18, you're buying momentum, but structurally not ideal because the bears had such a strong sell-off down to 15. The expectation is a minor reversal, then a test of the lows. So you do not expect most of the time a V bottom for a tight bear channel to reverse into a strong bull trend. So if anything here, the market's probably going to pull back, but strong enough rally that there's probably buyers below 15. Then just imagine, sell the closed bears 15, very disappointed with this 3-bar micro channel against them. So expect buyers down here. Just another reason to expect support. Trading range bar 19, we went outside down 20, bear bar closing on its low. At resistance, reasonable to exit longs below it and also reasonable stop order sell, but it's a good risk reward setup. Relatively small risk. You stand to gain maybe 2 or 3 times your risk for the reward for test of the bottom of the range. But strong enough rally, expect a second leg. I said the problem with the rally is we might get a deep pullback. The bulls, rather than buying here, might be expecting the tight bear channel to get at least a test of the lows after that first trendline break. So rather than buy here, the bulls buy at support during the retest. And then let's also judge the strength of the retest. Does it look like strong trend resumption where the bears are going a lot lower for a measured move? Or does it look like the market's in a trading range at this point? We know based on this rally to 18, it's more likely a trading range, or at the very least, a broad bear channel. You don't get 3 big bull bars like this in a strong bear trend. So the market begins to turn down. 22, bad stop order buy, expect sellers above, probably going lower, expecting a test of the lows down here, maybe the bar 15 close. Micro channel down to 23. 24 is a bad stop order buy. Low probability. Sellers above, sell the close. Expecting lower prices. Tight bear channel continuing. 3 pushes. 1, pause. 2, or 2, pause. 3, but still there's the close of 15 support, or I should say magnet, that's probably going to act as support. Selling here, now less ideal because you have 3 pushes down and approaching support. So 26 testing these support areas. Let's see, can the bears break strongly below? At this point, we have a bar closing above its midpoint, so it looks like at least bears are taking profits. Tight enough channel, it's a micro channel down to 26. First reversal, there's probably sellers above the first pullback, so bad stop order buy 26. 27, better signal bar, but still the first stop order signal after the tight channel down to 26. So probably sellers above and better to wait for a second entry long. Tight trading range, bulls get a second entry long, bar 30. That's a reasonable stop order buy. Okay to buy above 30, to buy back shorts, and to go long. I said the market's probably in a broad channel or a trading range at this point. And we just fell below bar 15 and found buyers. The market tried to break below 15 on 26, reversed up, low one short, but bottom of a trading range, reversing up a second time. Strong pair of bull bars, 30, 31, good for the bulls, expect a second leg up, but because of the sell-off down to 26, the upside is probably limited to maybe this resistance here. If a bull bought the close 18 and they were not quick to exit, they got trapped by the reversal back down. So there's trapped traders up here, and that creates resistance. But strong pair of bull bars, probably going to get a second leg up. Now it's a 3, maybe 4 bar micro channel. Might be a micro channel since 26, but tight trading range through here. 30, 31, and 32. They are part of the bull breakout. This will probably get a second leg up. There's trapped traders down here. Even if the market pulls back, limit order traders selling above 28, trapped by 30 and 31, or 31, 32. Still probably buyers below 32. 33 going outside down, but testing that support. 33 is a strong looking bar, but after the micro channel, there's probably buyers here, and the bulls will probably get a second leg. 33 is a strong enough bar, it might get a second leg sideways to down as well. So it might limit the upside. The bulls trying to resume up, bull breakout, reversal attempt, bulls hoping it's a pullback, and then leads to resumption back up. 36, big breakout bar, but you can see exactly where it's testing and reversing from. So the resistance to the left, you look back at where price rallied to on 18, then went sideways and reversed back down. The market's getting there a second time in 2 legs, and now it's the top of a trading range. So 36, when 36 was a bull bar closing on its high, at some point during the bar, it was a big bull bar closing on its high, but the context was 2 legs up to the top of a trading range after a big sell-off, so not ideal for buying up here. So it makes sense that we found sellers because of the trapped traders creating resistance up here. Inside bar 37, expect sellers above. Like I said, resistance above. We're at the top of a trading range. Expect sellers above these bars. 39, bear breakout bar. Might be an okay stop order sell, but it's sort of in the middle of the range. It's not ideal for selling. Better if you can sell above the bar. And then the market reversed back down. As it's reversing back down, we're getting back to support. It's a stairs pattern at this point. The market sold off, had a deep pullback, sold off to a new low below 15. So I'll show that. When the market fell below bar 15 on 26, it reversed up for a couple of legs, and any trader who bought below 15 made a profit, or at least had an opportunity to exit with a profit. So if the market breaks out to a new low below 26, the expectation is traders buying at the new low will make a profit. The bulls have really decent buying pressure now. There was hardly any buying pressure through here, just a couple doji bars, but that strong rally, that's buying pressure. A couple of legs up here to the top of the range. The bulls have enough buying pressure that it looks like, once again, it's either a broad bear channel or a trading range, and traders trade either pattern the same way. They're going to buy low and sell high. So they're going to buy at support. So if we fall below 26, there's probably traders buying down here. Also, bigger picture. For the bears, it's 1, 2, 3 attempts down. But bear micro channel down to 42, 43. So 43 breaking out to a new low, but there's a bear channel line, 3 legs, and it's a micro channel down to 43. The first reversal attempt will probably fail. So expect sellers above 44, 45. Not a great stop order buy. At a minimum, the bears will have an attempt at a second leg down most of the time, but a second entry long is reasonable because that's support in a trading range. So the bears getting an attempt at a second leg down, but as they try to break out to a new low, there's buyers once again. Maybe a second entry long, maybe a third reversal on 49. Bull bar closing on its high, forcing you to buy right at the moving average, which is acting as resistance here. But strong enough bull breakout bar 49, you can expect a second leg. It's kind of like back here, tight trading range, bull breakout, we pulled back, but bulls ultimately got a second leg. Tight trading range, bull breakout. Even if we pull back, there's probably buyers below or in the buy zone of 49, and you can expect a second leg up. 50, bad stop order sell below the bar. It's at support in a trading range after a bull breakout of a tight trading range. So the traders selling above 48 or selling anywhere in here, trapped by bar 49. 50 might give those traders an opportunity to exit with a smaller loss or at break even if they sailed in, and that produces the fuel for a second leg up. Even bar 50, this reversal bar, to pause and then an attempt at a second leg down. The bulls see a high 1 and then a high 2 bull flag, and then they get trend resumption here. 53, 54, pair of bull bars closing on their high. Good for the bulls, probably going at least a little bit higher. 54 is a bad stop order sell, probably buyers below the bar. First reversal of this tight channel, probably will find buyers below 55, so probably expect buyers below the bar and at least an attempt at another leg up. And then sideways for a few bars, bear breakout 58, but the first trend line break, it's really testing the trend line. So 58 might be strong enough for a second leg down, but tight enough bull channel, it's a breakout on a higher time frame, and that may get a second leg up of its own. 59.60, now the market's back at resistance. Why is this resistance? Because of bar 58. Remember, tight trading range here. So the market's going sideways through here, and then all of a sudden a big bear breakout bar 58. Anyone buying up here is trapped by bar 58. When the market comes back to this price, anyone who bought has an opportunity to exit around break even. So there's probably sellers above bar 60. 58 is expected to get a second leg sideways to down. In this case, deep pullback, maybe second leg sideways. Then bears get a second leg, but now it's 3, pushes down to support. So there might be more buyers somewhere below bar 61. There's a bear channel line and support just below the bar. So not ideal for selling. Big breakout bar and then a very small follow-through bar. Bears losing momentum at support, probably buyers below the bar. I said tight channel to 54, wedge, bull flag, maybe get a second leg. 63 is a big bull breakout bar. This might be a resumption up. 63 is a reasonable stop order buy. Good momentum for the bulls. Expect the first reversal down to fail, so probably buyers below 64. And then a big breakout bar, 65, further trapping traders, even getting far above all these bars to the left. Anyone selling here trapped by bar 65, expect a second leg and a measured move up. Measured move takes you to the resistance from earlier, so reasonable magnet and profit target. Smaller breakout bar 66, we might pull back, but it's a bad stop order sell. There's probably buyers below 66. And then 67, inside bar, bear bar, but after the rally, there's probably buyers below for at least an attempt at a second leg. We are getting closer to resistance, but the momentum is good for the bulls, and the selling pressure is weak. The bears haven't done enough to convince me that we're going a lot lower yet. Outside up 68, but now as we approach resistance, there might be sellers above. We also pulled back, so we have a spike, pullback. Now we're in the channel phase. Expect sellers above bars, and bulls will buy pullbacks instead. So there's a profit-taking bar, bulls taking profits. 69, bear, reversal bar, but a tight bull channel. Low probability stop order, sell below the bar. It's probably buyers below the bar for a scalp, but then probably sellers above bar 69. Inside bar, and then the market breaks out above 69, but it's a doji bar at resistance. Also, smaller time frame, spike, pullback, channel, 3 legs up, bull, channel line, so low probability bull breakout here. Probably sellers above 71 and 72. 73, bear, reversal bar. Now it's 3 or 4 legs up on the lower time frame. At the bull channel line, you expect channels to evolve into trading ranges, and that would mean the price coming back down here, maybe at the low of bar 68. Low probability, sell below 73. Great risk reward, which means low probability, but better because of location, context, the bars to the left. It's reasonable for bulls to exit below 73, and it's reasonable for bears to sell below 73. As far as selling 73, where do you put your stop? The stop does not go above 73. That would be a skunk stop. It does not make sense. We have to ask yourself, is your premise invalid if the market goes above bar 73? Tight bull channel, the market might go a little bit higher, but ultimately you're expecting a reversal at resistance somewhere in this area. So it would make sense to have your stop somewhere above this zone between these horizontal lines. If anything, traders are selling below 73 and selling more above the bar. In this case, they got a bear breakout 74. Good for the bears. Expect a second leg down. I suspect we'll test a little bit lower. There's resistance up here with evidence, price action evidence now with bar 74 bear breakout. 3-bar micro channel. Expect sellers above and a second leg down. Decent reversal bar 76, but the micro channel down. Expect sellers above and a second leg. It might go a little higher. 76 might be a strong enough bar for its own second leg sideways to up, but I expect resistance at the low of bar 73. And you can see we found sellers above the first pullback and a second leg down, bear micro channel, pullback, and then second leg down. We're testing near support, the bar 68 low, the moving average. There might be buyers below 77. And then a second reversal 78. That's a reasonable stop order buy, assuming it's not bar 78, because we're late in the day. It's not worth trading, but there is a reasonable stop order buy above the bar. Traders make 1 times the risk if their stop is below bar 78. Market went for about 1 unit of risk, 1R, right back to resistance. I had the low of bar 73 drawn for a reason. Tight channel, limit order bulls, maybe they're buying below 73 or 72. They're trapped by bar 74. That creates resistance, sellers above. What about bar 79? Bad stop order buy above the bar, but also a bad stop order sell below the bar. Middle of the trading range. At the high of the range here, sellers above expected, probably buyers below, but the buyers may not come in until a little bit lower in the range. Same with bar 80, not a great stop order buy. It's in the middle of a tight trading range, probably sellers above and buyers below. For stop orders today, especially based on the higher time frame context, I thought selling below bar 3 was reasonable. Selling below bar 5 is reasonable. Sell to close 6. Selling anywhere through here during this bear breakout is reasonable. Higher probability for selling. Bad risk reward. In theory, the stop is very far, but the buying pressure is weak. So selling for any reason is okay. Sell to close 11, 12. Even if you sold 15 and use a wide stop, market came back and tested the low close. But selling 15, not a great stop order sell or market order sell, because it's actually testing below yesterday's low where there is support expected. Tight channel though, expect a second leg down. I thought 16 was okay to exit. Shorts above, but not ideal for buying to go long. I'd rather see the trend line break and then look to capture a second leg. Reasonable stop order sell below 20. But through here, the market's probably in a trading range. So in the middle of the range, not ideal for trading. Lower in the range, okay for trading, looking to buy. Second entry, long above bar 30. That's a reasonable stop order buy. Bull micro channel. Reversal attempt, but back at support, and then a bull bar close on its high. This is possible trend resumption for leg 1, pullback leg 2. 35 was an okay stop order buy. 2 legs up to resistance, and then consecutive doji bars 39 and 40 are reasonable stop order sells. But once you get to a new low, reasonable to take profits there. Second entry long here is reasonable, so 49 is a good buy. Let's see through here, a lot of tight trading range behavior through here. After 3 legs down to support in the tight channel, possible wedge bull flag, 63 was a reasonable buy. And then up here I mentioned, 65 also reasonable stop order buy, expecting a measured move up. 73 I thought was an okay stop order sell, at least in theory. Maybe it's too late in the day for trading, but the spike in channel with 3 or 4 legs to resistance, selling below 73, definitely to exit longs is reasonable, but also selling to go short is reasonable. And I thought 78 was a good stop order buy as well for a scalp. Take profits at the top of the range. For limit orders, probably sellers above 1. I mentioned not great for buying below these bars because of the higher time frame context. Selling above 4 is reasonable. Selling above these bars, but that never triggered. Selling above any of these bars is reasonable. Expecting a deep pullback here, so not ideal for buying below. Up here, this is near resistance. Better, if you're going to buy with a limit order, better to buy at support. So limit order buys below 16 or 15. That gets triggered on 26. Bad low 1, 28 buyers below. I'm not sure if that triggered, at least on my chart. It did not. Bull micro channel, buyers below 32 was reasonable. Buyers below any of these bull bars looking for a second leg is reasonable. There's a limit order sell. I like to look at the high close or best fit horizontal line where price tested the most. Like price only got here on bar 20, but it tested the close of 18 on 4 bars, and then that's where we tested on 36. I'm not sure if you put a limit order there, it would have been filled, but that's a reasonable place to look to go short. And then I mentioned selling above 37, 38 is reasonable. Buying at the new low is reasonable. Low 145, bad stop order sell. Buyers below is okay. Even selling here, selling above these bars in this tight range is reasonable, but you get trapped on 49 and then an opportunity to exit here, 50, 51. Maybe it's 3 legs up to the channel line, so limit order selling up here is reasonable. But the bull channel was fairly tight, so looking to buy a pullback in a second leg is also okay. It was possible that we had to sell off for another leg to a new low, so buying down here would have been reasonable, but we never got there. I talked about the bar 53 low being support, maybe a limit order buy there, especially with the structure. 3 legs down, it's a bear breakout attempt of a bear channel line at support. So buying here is okay. I think I said buyers below 62. Buyers below 64, although that one did not trigger. First reversal after a strong bull bar. Expect a second leg up, so buying there is okay. Buying below 66 is reasonable. Buying below 69, I said, but that didn't trigger. I talked about not buying below 73. Maybe selling above 75 or 76. Micro channel, expect a second leg down, but not ideal to sell above bull bar closing on its high like that. So the limit order sell is probably above 75, which triggered on 77, and the bears got a scalp out of it. And then I talked about sellers above here, buyers below here. All right, that's going to be it for today's end of day review. For more on price action fundamentals and how to trade price action, please visit the Brooks Trading course. There's a link in the description of this video. Once again, thanks everybody for watching, and I hope everybody has a good night.